Hi, this is Elle with Realtor.ca. Today we honor to have Lauren Andrews, who's a mortgage broker and founder of Dominion Lending Expert Financial. Today we are going to discuss regarding 7 factors to consider when buying a home. Hi, Lauren.
Hey, Elle, thanks for having me on again. This is exciting.
Yeah, for me as well. It's very exciting and it's very great topic for people who are going to buy a home.
Yeah, perfect. And so I think what we want to do, and we'll just kind of have a discussion. You can ask questions as we go along too. And because, obviously buying a home is one of the biggest investments anybody's going to make over their lifetime. And part of the thing is making sure you understand during that journey some of the things that are involved to get you where you need to be, and to make sure that we can help, between the realtor and whoever's doing the financing, is to make sure that we navigate through all of the turbulence that could happen, and making sure that you understand what to expect, and it makes it a lot easier that way. Okay, so we ready to go?
Yes, for sure. It's
All
like
right.
a teamwork.
Perfect. Okay, so what I'll do, Elle, is I'll just go through. We're going to talk about 7 factors, and we can just have a discussion, ask questions as you go along, and then if anybody's watching this, they can always post into wherever it's going to be posted those questions too if they come up. If we don't answer them. So, and then you'll get back to them as soon as we need to, right? So,
Yeah, for sure.
so 7 factors in choosing the right home, the right price. Okay, we're going to talk first of all about the first factor is how long you're going to live there. So, Elle, do you ever have people that are thinking of maybe living somewhere for a short period of time and then moving on to another place?
Absolutely. I
Yeah.
have some clients who thinking, let's buy this home for a short period of time, let's say a year or 2 years, and then move to the next level. So please give your advice regarding this kind of, situations.
Okay, so here's the thing. There's always a risk. Like there's less of a risk the longer you're there, because sometimes you get into market fluctuations. Like right now, during our time right now, the condo market is taking a little bit of a beating in terms of maybe some price fluctuations and stuff like that as well. But when you're looking at something for short term, you have to look at all the costs involved. So even if you were to buy a home and it was to appreciate by, say, 20, maybe $30,000, let's say, um, when it comes to selling that home, there's costs, correct?
Yeah, for sure. There's
Right.
always
So
closing costs, all kind of costs
yeah,
involved.
lands transfer tax, and then when you get into selling that home, you got to also worry about, you got realtor fees, you got everything else. Again, more legal fees. So you really have to make sure you keep into account the type of costs that are incurred during that transaction from buying and selling, and particularly in selling if you're going to keep it for a short period of time. Because chances are, if it's going to be a short period of time, even though you might gain a little bit in the market, if it appreciates, it might end up costing you more. So maybe the answer might be no if it's really, really short term. Does that all make sense?
Yeah, for sure, definitely.
Perfect. We're going to jump into factor number 2 is how much house do you need? So, Elle, when you're looking with clients, what kind of factors are you keeping in mind when you're looking for the type of home?
There are lots of factors involved, such as like the eligibility for a mortgage or their need. For example, if they want to expand their family and there's a couple who want to have a baby in future. So there are lots of factors involved.
Perfect. Yeah, and that's huge. So understanding short-term and long-term goals is important, because I'm sure you've gone into family homes, and based on what you've told them, they really like the house, but you can tell they're going to outgrow that house relatively quickly based on what they're thinking. And the other flip side of it is if qualification is not an issue and they end up buying something that is massive or too big, they also have to factor in, what's the additional costs? Like there's obviously, the bigger the house, the more the property taxes, the more the maintenance fees and everything else. Obviously, the bigger the mortgage because it's a more expensive house. So those are factors that we have to keep into account. When we get into factor number 3, the big one is credit rating. Okay, so the higher your credit score is, then the lower the actual mortgage rate will be. You'll qualify for more of a mortgage when you have good credit.
I have a question for you. Like,
Mm.
can someone buy a home with a bad credit?
So if you have bad credit, can you buy a home?
Yes.
Yeah, absolutely. So some people think, oh my goodness, my credit's no good. I can't really buy a home right now. But no, it's not necessarily the case. So if you have challenged credit or a lower credit score, what's going to happen is you're going to be able to access basically a mortgage that's suited for that particular situation. Now, most times, Elle, and that's it, in those situations, you'll need at least 20% as a down payment, okay? Because they're not insured through CMHC or Genworth. And interest rates are usually a little higher as well, but allows you to get into a home now. So if I was in a situation where I'd say, okay, hey, listen, I can wait a year or two, improve my credit, and then get into a home, and I might save a little bit in that interest rate, or I can do it today and pay a little bit more of an interest rate. I think the other factor you have to consider is in 1 or 2 years with the house appreciation, what's that house going to be worth a year from now or 2 years from now? Because it may make sense just to do it now, right? Yeah, so that's a great question.
And the other question, like some people want to pull their credit score and come to you. What's your recommendation?
Yeah, you know what? Keeping track of your credit score is important, but you also have to understand that the credit scores that you pull online through Credit Karmas and everything else are different from the one the lenders use. So we use Equifax and TransUnion, but it's a different level of a credit score. So what I've seen happening with people that have been pulling credit scores is that it's a higher credit score that they're getting that we would get as the lender. And sometimes there's no details in terms of what comprises that credit score. So when we look at what the lenders are going to see, we're able to say, okay, we're able to assess it and actually make some improvements within a short period of time as well through strategies to increase that credit rating. So that is important too.
That's good. So do you have any suggestion to help people they increase their credit score?
Yeah, absolutely. Great question. So some of the things you want to look at is, one, you want to try to make sure all your payments are being done on time. Okay.
Yes.
Also remember that cell phones are reported on the credit bureau. Okay. So don't get in the habit of paying your cell phone late. Set it up for automatic payments so it comes out of your account every month, so you'll never miss a payment. I find that that's something that's actually pushing a lot of people's credit scores down because they've missed a cell phone payment. The other thing is your credit card balances. You want to make sure, try and keep them under 50% of whatever the limits are.
Okay.
As it gets closer to the limits, it's going to start driving your credit score down. So you definitely want to make sure that you're trying to keep those balances down as much as you can. All right. Another great question.
Awesome.
So factor number 4, we're going to talk about closing costs. Okay. So, closing costs, Elle, can be, anywhere from like 3 to 5%. The lenders account for 1.5%. But you also have like movers, other things that are incurred in terms of, activating accounts and everything else in terms of utilities and whatnot, your land transfer taxes, your legal costs and everything else. So those are things you have to factor in when you are buying a home. One of the things that I would say, if you're a first-time home buyer, there's rebates that you're going to get back on your land transfer tax. So Elle, if I'm buying a home in Toronto, what happens?
So there is a second land transfer tax involved.
Exactly. And if I'm not a first-time home buyer, then I have to pay that, right? So
Yes.
those are some of the things you got to keep in mind too with some of the closing costs. The other thing too is your realtor. So you definitely want to connect with a realtor to help you focus your search. Okay, your realtor is going to be your negotiator, right? You're actually investing your energies and everything into that realtor because they're going to be representing you. Okay. And they are the ones that are going to negotiate. Now I get calls, I get calls all the time saying, hey, listen, I'm looking at this home. And I ask, well, who is your realtor? And they say, well, I was just going to go right to the listing agent, right?
Yes.
What would you say about that?
Actually, going to listing agent won't be their benefit because listing agent is already have a contract with the seller, and he has to put the seller's interest prior to his interest. Then you become as a customer. So the only thing that he has a duty to you is being just honest with you.
Perfect. So I always compare, if you're trying to go to the same realtor that's selling the home, it's like if you were going to get a divorce, like, would you use your husband's lawyer?
No.
No, you'd get your own representation because you need somebody to look after your interests first. Now, if I'm a buyer, Elle, and I'm buying, is there a cost?
No, there is absolutely no cost as a commission comes from the seller. So absolutely there is $0 for you.
Perfect, right? So that's excellent. So you get all the representation as a buyer, and it's not costing you anything. So fantastic. The next thing is, what can you afford? When we look at, so here's where I get into um, comfort, the people's comfort level, right? So if I'm making a certain income, okay, I could qualify for X amount. But
Yes.
is that amount a comfortable amount that you're going to be paying every month? So what we try and do, Elle, is we try and see how much people qualify for and get them used to actually paying that amount, right? So let's say, for example, if I get my mortgage that I'm looking for right now, I'm paying rent, say $1,500 a month. But I know if I buy a house, my new mortgage payments and my property tax is going to be $2,300 a month. So
Yes.
really, what I should be doing is getting the habit of saving an extra $800 a month, because that's going to be the difference in terms of my payments. Get used to it, and what will happen is you'll get used to those payments. You'll understand, you'll be comfortable with them, but also that extra amount you're putting aside could now go towards your down payment as well, right?
Yes.
If that makes sense. The probably critical time is to make sure that you get pre-approved. Okay, the pre-approval is essential in understanding exactly what people will qualify for, what you will qualify for in terms of a home purchase.
I have a question for you. Let's
Mhm.
say if I have pre-approval, is it guaranteed that I get my mortgage?
That's a good question. So not necessarily. So you have to understand, a pre-approval is really, how we do pre-approvals is we underwrite all the income and everything else, to make sure that we have we're very, very confident when you're going forward, whether you can go through and you'll get the purchase. Most of the times you can't, you'll try and protect your clients by hopefully getting them a condition on financing, because there's a couple of things in here. If I'm putting less than 20% down, okay, and let's say we went through it and we got a pre-approval from a lender, right? And the lender says, yeah, okay, we're okay with this income. They're on contract, but we're okay with it. But now, once there's an actual deal, that gets packaged and sent off to the insurer, because there's less than 20% down. It goes to CMHC or Genworth or Canada Guarantee, one of the three insurers. The insurer could look at it and say, no, we don't like it, right? And they could say no, even though the lender said yes. Okay. So you have to, and insurers do not do pre-approvals, right? So I have seen this happen before,
Mhm.
where it's come to us from another lender per se, and it was declined through the insurer. We're able to repackage it and get it off to a different insurer and get it approved at the time. But you have to be like, nothing's 100% until there's an actual deal. Okay.
Yeah.
And say, for example, your clients could be gold, L, right?
Yes.
But maybe the house that they're buying, like, was, built on an old oil field, or maybe has a crack in the foundation, there's something that comes up that the lender's not comfortable with the home, right? And you wouldn't know that in a pre-approval because there is no home. You're just looking at the clients, right?
Yeah.
Once the actual deal comes together, now you're putting all the pieces together for the lender, and that lender can now make that assessment.
Why is it important to get pre-approvals? Because you guys need, sometimes to look at that offer. So why is it important?
So it's important. So for example, let's say you're taking somebody on their home buying journey and you're taking them into a home that you feel that would be a good fit for them. If you're walking into that home not knowing even if you could afford this home, okay, then your mind doesn't work the same as understanding that this is within our budget. We could buy this home if we choose this particular home, and making that decision to buy the home is just a matter of now putting some stuff together over a few days and getting it approved by the bank. So if I know I qualify for X amount and this home is within that range, there's a different mindset. I feel differently when I'm in those homes looking at them. Does that make sense?
Yes, absolutely.
Perfect.
Is there anything that you want to add?
I think that I think that we've covered most of the stuff here. I think if they have any questions, anybody can reach out to you and we can definitely help them more and guide them in any way that they need to be guided.
Absolutely. If anyone has any questions, so they can ask me, so I can direct you to the Lauren Andrews. And Lauren, you always provide us with the valuable information, and hopefully we see you in near future with the awesome and great information that you are going to let all audience.
This is awesome. Thank you again for having me, Elle.
Thank you. Have a nice day.
You too.
Bye-bye.